Hi, welcome everybody. And just to give you a couple of things, some follow-up from when we were at the Traders Expo. Thank you all for attended. That was a nice class session that we conducted for the CME group in the middle of the hall there. And really, I think there were some great questions that people were talking and asking me about what we were projecting at the time, which was the Algo 17 and this page right here from our live trading room. So what do we have right now? Well, this is again Friday. This is live. This is our trades that are happening right now. So just give you a quick update. A couple things that we shared with everyone was over here. While we were at the CME booth presenting, this trade was long and it had gotten out of half position. And while we were talking, it was still in the trade. And then when I gave my second position, it exited that trade. Now, yesterday, while we were in Chicago, we talked about the fact that the volume analysis was divergent, and I was actually still looking at positive upside in the market, and I said, in fact, in the live trading room, we said the market's more than likely to pull back, needs to hold 12 to 16 support. And the reason I came up with that is this was the area of where the market took a profit right there, number one. It was also the pivot support. Now, the market sometimes has different ideas, and what did it do? It went out of half the trade, still made money, and did a decent job. It went long at the end of the day because the volume was looking better. Unfortunately, it stopped out, so the net results was a small profit for the day in the algo room on the 15-minute model. Today, it's now back long, and as you can see, the 15-minute model, what we use is now a few things. All we did was take the Algo 17 version 2, which allows us to do a little bit better job of filtering out some PPS signals, whether we use a moving average on different parameter settings. So you can optimize whether you want to use a moving average, a high, low, or close. Anyway, more on that. By the way, next Thursday, we're going to conduct a webinar here. And if you're interested, sign up. Go to the Person's Planet website. And if you're watching this on YouTube channel, you already have access to the Person's Planet website. Contact us and say, hey, if I didn't sign up in your database, then fill out a form saying, hey, I'd like to be notified of any updates and new webinars. So we're going to go through a presentation on what goes into the Algo 17s. And again, if you want more information on how to join this trading community, certainly say contact us. I'd like more information on the price structure, which is extremely affordable. I believe it's $149 a month to join the live trading room. Again, what does the live trading room give you? Two trading rooms, stock room and the algo room. What do you see in the algo room? These strategies that are in front of you as they happen. So it's one price fits all. We don't charge money to take trade signals for any one of these strategies, and we go through the performance every week and make sure that everyone has had an enjoyable week. Now, here's the 5-minute model, and this is what we occurred yesterday in the 5-minute model. If they're blue lines, they're profitable. If it's a red line, it's non-profitable. As you can see, we had an actually stellar day yesterday. The day before, look at what we've achieved with our technology. Basically, if it's bright blue, this signifies that the PPS in the 5-minute is in sync with a higher time frame. That means these PPS arrows that you see, if you're a Thinkorswim client, those are the PPS indicators that you see on your screen. If you have TradeStation and you have the Person's Package or Trade Navigator with Genesis, these are those indicators. It's a proprietary bullish or bearish momentum indicator, and it actually paints arrows up for buys, down for sells. Anyway, what we've done is if we get multiple time frames that are in sync with a specialized volume tool, if the volume is upticking and you get a buy signal and everything turns bright blue, you have a nice higher probability buy signal. Now, the same can be said with a sell. If it turns white, that means something happened and the volume, as you can see, the momentum of the volume is starting to diminish, which tells you you're probably due for a short-term trade. And then again, as the volume starts to improve, the market, and it turns bright blue, it's back into a buy mode. Here's one that went for a little nick on the short side, but out of 1, 2, 3, 4, 5 trades, Very nice day on the 5-minute model. So all of these signals, all of these trades show up in, and so far this morning, nothing is fired off here on the Emini S&P 5-minute model. Just hasn't made the criteria. What is happening is over here, as we discussed this morning, is crude oil. Now this is, it's kind of good and it's kind of bad. And I want you guys to check this out because this is from a learning perspective. Here we have a breakdown. You can clearly see the charts turned white, which means the 5-minute is now not in sync with a higher time frame. But look at the volume action. What is going on with the volume here? We turned negative. The volume went negative. The volume indicator, and this is a volume indicator, not a price-based indicator. The momentum of the volume just went negative. So at that signal, what does that signify? You have good confirmation that there's better selling pressure. That's what that means. So what happened? It got out short 2, and we always do 2 contracts. You can do 20, you can do 100 contracts and piggyback these trades. But in the live trading room, we have this formula for the normal amount of trades an individual retail trader would do. Most retail traders are not doing 100 lots. So let's just cut to the chase. But I believe that the transparency, number 1, and the education, number 2, and having everyone be able to take advantage of these trades from a day trade perspective and verify it with their own information. So I don't tell anyone to ever abandon anything else they've learned anywhere else. I just think that we're able to give you better clarity on trade signals in this trade room that are being generated with this product called the Algo 17 version 2. So with that said, what is going on right now in crude oil? Well, it went short. It took half the profits at its intended profit. You can see out of 1, it's still short 1. Now, what I don't like is the fact that I would never initiate a new short here because the volume structure is improving, as you can see. My guess is it will come out, and you've got an emergency stop function here. And, sometimes we do better by getting out of everything all at once, and sometimes we do better by trailing the stop because the market could crash forever. Sorry for the John Madden writing. My point is that as a discretionary trader and looking at this, you could say, I'm short the market from around 56.37, and the market's now at 55.88. I took half off. Maybe I should tighten that stop, or maybe I'm done for the day too. But you, as a discretionary trader, can at least piggyback the model and look at that and say, maybe I'll tighten up the stop. I don't want to put the stop. And by the way, you just saw something happen. You see where it says 56.25? That's the emergency stop right there. It just populated in front of us. That's the emergency stop for the short of the second trade. So think of it this way. If the crude oil pops all the way back up, how much profit are you going to give up? So what's the likelihood in this market condition? Here's the volume going up. It's not showing a lot of selling pressure. And right now we just populated an emergency stop in the marketplace. So for me, I would say the likelihood, and if we combine what the average true range of crude oil is. So that's another thing that we like to teach people. Currently, September crude oil has an 89-cent range, and the 10-day ATR is $1.82. So that tells me it hasn't fulfilled its complete trading range that it normally has over the last 10 days. It could either rally from here or continue to break. If you've already got a profit, why not let this ride? I just wouldn't initiate a new trade unless that volume turned more negative. All right, so that's how I try to help traders to see what these signals are doing. So that's what's going on. And here, as you can see on the board, crude oil, 5 minutes. It's only say short 1 because it covered the half position already. It was in short 2, now covered 1, now it's short 1. You can see 56.36, 55.85, up $500 on that one trade. All right, next, this is the British pound. So the British pound this morning, from what I've already shared with you, you've already learned a couple things right now. If 2 time frames are in sync of sell mode, so we have PPS sell signal. If 2 time frames, and again, 5-minute model on the pound, 5-minute model, if the 2 time frames are in sync, they're red. So market red. Let's go down and look at the volume. It's the momentum of volume. It's negative. It's going down. And it's going down, and you now have a sell signal. So unfortunately, This has not taken any profits. It's still short. You can see it's short from around 124.49 right here. Where's the market now? 124.19. That's a 3-point move in the British pound. Let's take a look at the British pound and say, well, what is its average true range? Am I overstaying my welcome? Currently, I'm looking at a different monitor over here, and the British pound right now has about, 75-cent range, and the 10-day ATR is 86. Now, in futures, we call it points. In Forex, you guys call it pips. All right, semantics. You got a 75-point range today when you normally have an 86-point range. So we're pretty close to what the market's been trading in its normal last 10 days. So my guess is this market, if it goes a little bit lower, here is the Algo system's intended profit target. Here is the emergency stop, and here's the trailing stop. Those orange and that little red in there. So that's what this means. When the trade was at first initiated, it had the stop, which is that line in the sand. So there's your risk, and there's your intended reward. Intended, key word. Sometimes we get our rewards, and sometimes we don't. But we have to have a plan, and that's what the Algo Optimizer did. It allows us to optimize, to look at what are the normal trends or what are the normal moves that this market's done, especially from a day trade perspective. All right. So how does this work help you? If you see there's a short signal generated by the computer and by quality algorithms or criterias like moving average cross, or the market breaks below lows, or things of that nature, or more time frame, higher time frame sell signals such as the PPS, you can go with that trade or that trend directional trade. Then if you use an additional filtering mechanism, is the volume trending down? Because if I'm going short, I want the volume trend to be going with price, and that's exactly what's happening. How do you make money from that information? Well, no trade is risk-free. No trade. There's always risk. But I can say at the very least, if I have that much risk, I want to at least make a 1-to-1 risk-reward ratio. If I have a 60% of my trades, 6 out of 10 trades make money 1-to-1, I end up making money in the long run, right? I want something a little bit better than that. And that's why sometimes we might get huge trend runs and sometimes we don't. So I need a model that gets out of maybe half the position. Get out of half. And that's what this model does. We have the intended profit target. It'll get out of half. It'll trail the stop in the balance unless something changes dramatically. And that's where this information is sitting right in front of you. Where is it sitting? Well, not only can you see the charts right in front of you, right here, you can see the trades generate, but if you can't see that through the, the scope of the monitors that you're using in your home or at your office, it's clearly visible right here. Strategy, positions, and there it is. British pound, short, 2, 124.49, 124.17. It's up $400 on the total position. It entered this strategy at 9:40 this morning. So everything's really transparent. So we have gold, pound, crude, Emini S&P's 5-minute, 15 model, and then we have Spider 60 minutes, SPXL, BXX, 120, BXX 60 minute. So instead of charging $150 per one of these strategies to run, our trade room runs these strategies and allows you to pick and choose what strategy and what they're doing, all within the confines of when the trade room is open from about 9 in the morning till 4 in the afternoon. So this is what we're doing here with the Algo trading community here with Person's Planet. Now I want to kind of introduce you to what about the overall market. When I was on the market drive on TD Ameritrade's website, phenomenal program. I got to tell you, these guys, Tom White, Oliver Rednick, is good guys, man. They kept up with me pretty good. Gave me a run for my money. I was talking about being bullish the market because the breadth of the market is still the advanced decline. Now, we don't just look at advanced decline on the NYSE because that's what a lot of guys are doing. They're only looking at this. They're only looking at the tick, and that has to do with the NYSE. And take a look at this, guys. The NYSE looks a lot different than the Russell. The NYSE advanced decline looks a lot different than the Dow. The NYSE looks a lot different than the Qs. So if we're trading the Qs, and that's the secret of John Person's work. In fact, it came in this book right here, And we talked about Mastering the Stock Market. This book came out in 2011. That's 8 years ago. I mean, that's a long time, guys. We came out with this book and said, listen, guys, you're trading the stock market. If we have the technology to break down what stocks are going up or down relative to that one stock index, then that's the information I want. If I'm trading the Emini S&Ps, you know, quite frankly, there are days, weeks, months where the influence that drives the NYSE is not playing a part of what's driving the S&P 500. After all, technology, utilities, REITs, all of that weighs on different market segments, right? Capitalized weighting. So with that said, if we're trading S&Ps, wouldn't you want the advanced decline to be in front of you? And that's what we were trading and teaching at the Traders Expo. And I shared this with people. I said, look, that's the advanced decline. If the spiders, if you're trading E-mini S&Ps, you're trading off the cash. What is the cash trading off? Individual stocks. So why aren't you following somebody who's teaching you the right way of trading? That's why I invite you to give us a try over here at Person's Planet and take advantage of what you see here in the room. If not, let me just bring into focus the other trading room that you can switch between. And that is this right here. And this we use, of course, the Thinkorswim platform for our stock and option positions. So quite frankly, here's a couple of the trades we have. We put on for our Thoughts and Observations newsletter, we're long Twitter. We actually did a 38.40 bull call spread for 65 cents in Twitter. We have a Tilray position for pot exposure. We have Wells Fargo long, and we're up about 7% on that trade. VNQ, which I talked about at the Market Drive TD Ameritrade, we're in puts on VNQ, which we're looking for continued breakdown. I am in a 131, 128 bear put spread in TLT. I'm here to tell you, I'd like to see this on a weekly basis close below that 131. We're long Occidental Petroleum, we're long Hess, and we're long GE. We also have a long call spread, which we bought back the short side. We've traded around this position in IWM. Our current position is net long, a 155 call, and we have a deep profit involved in that. So if you would like to know more about what we do here at Person's Planet, and if you want exposure to a weekly advisory service called the Weekly Thoughts and Observations, that's what that live trading room does. That live trading room goes over what the weekly thoughts and observations are. You can buy it on a monthly basis, or you can sign up for an annual subscription. But I do invite you to at least attend next week's Thursday Customer Appreciation webinar, which we will be sharing with you how to integrate these indicators both on Thinkorswim, Trade Navigator, and again, the Algo 17 program. Thanks for watching. And again, if Friday, today, we close greater in the, let me get the post here that we said, if the IWM needs to hold above 156.20, and the key for longer term upside is a weekly close greater than 155.33. Currently, we're at 156.51. So if we are going to see any upside final momentum breakout in IWM, technically we need to see a weekly close greater than that line in the sand. I'll update the video on YouTube for you next week. In the meantime, thanks for watching and have a great trading weekend. Or at least I hope you had a great trading week and have a good weekend and rest up, because the FOMC July 30th and the announcement on the 31st should be an interesting one for us. Thank you all very much.